This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil. I'm going to give you a stock market update, and then I'm going to go through the market conditions, as well as I want to go through a couple indexes, and I want to show you what's going on with some of the biggest names in the market right now. So let's go ahead and get going. There's a lot to cover. I like to keep it in around 10 to 12 minutes if I can pull that off. So this I recommend guys take a snapshot of. This is something I've been following for quite some time. When I look at market conditions, I've got the trend component, I've got a momentum component, I've got a volatility component, overbought, oversold. Now, I just use the RSI 5 on the weekly for the overbought, oversold. What I do for my subscribers is they get an overbought, oversold reading based on the trends of each individual sector and the overall market as well. So you want to, any subscribers want to take that into account in terms of where we're situated, because this is a really short-term sign. It's not really giving us the true feel. A lot of the sectors have been overbought and they're trying to work that off. And then the sentiment number. And I use the Investors Intelligence sentiment number, bulls minus the bears, and right now it's at +4. At the lows, these two lows, it was -19. At this peak, it got up to in the high teens, and then we just got back up into like the low to mid-teens here. I like to keep an eye on the number of bulls when we're moving up. But now that we've started to drop here, I'll probably start to keep track of what's going on the bear side. But anyway, this week we had a drop. It was a +11 last week, and more people got bearish. The bulls dropped from 43 to 38. More people turning a little bit more bearish. So this is the way I look at it. We've got this overbought, oversold oscillator, this RSI 5, working its way down. If this can get down towards this oversold reading and this turn negative, now these are going to both turn positive, right? So from a shorter term standpoint, use these two together, and that can give you an idea, like we might be coming down here, and if that happens, and I'm not saying we are going to drop from here, but if we do, and both of these this gets oversold and people get negative, that could represent an opportunity for another trading rally. So we want to be on the lookout for that. That's how I use those bottom two. Now, the volatility is the average true range. And I use a 18 MA on top of the average true range to tell us whether we've got a shift in the volatility. And the average true range 20, so I'm going back 20 days, on the daily spider chart is now above a rising, this is turned up again. So we've got a rising ATR and a rising moving average. And so in that case, the volatility is actually negative. When we have rising volatility, that's a sign of elevated risk. You can see while this was kind of in a down phase, the market was more in an up phase. So we want to keep track of that when this looks like it's turning up. And so right now it actually looks kind of neutral, but it is starting to turn up, so we turn that negative. Now, this is actually neutral, the weekly one, because this is rising, and but the ATR is below. The ATR is below a rising moving average. If the moving average rolls back over, that would be bullish. If this turns up above and it's rising, then that'd be negative on the weekly basis. So just something to keep an eye on. Let's go ahead and move over into the trends now. So I want to talk about the trends and momentum. I'll start with the monthly. We've got a rising 40 and a declining 18 on the monthly chart. Okay, that's a neutral trend. We don't have any real reversal or anything like that. We've got a longer term moving out 40 MA, which does provide support in the trend, but the 18 has rolled over and it's actually already failed at that line. So, and it might be failing at it again here without touching it completely. So we're in somewhat of a dangerous spot here. Anytime we're below a declining moving average in the 18, and I've gone back, you could go back through some older videos. Anytime we fail at a declining 18 line, there's a lot of risk in the market. So what I usually look at is if we're below a declining 18 month, and we're below a declining 18-week, that's a high risk area, and I call it kind of like a no buy zone. If we're down below that line and we're not oversold and we don't have bearishness, right? So we get down into this area and we get oversold and we get a huge number of bears, and we actually had momentum divergence here, then I might have a shift in thinking. Yes, we're below both of these lines, but we're oversold, people getting bearish, we've got some divergence in place, we can play for a rally. Right? So we'd be looking for the same kind of scenario to develop here if we want to get bullish again or play again to the upside. Right now, I would call this a no buy zone as long as we stay below the 18-week line and below the 18-month line. All right, I hope you follow that. So if we get a drop down in here and we get oversold and we turn negative, like more bears than bulls, and we get an oversold reading, and maybe even this shows another layer of divergence where the MACD makes another higher low, then we can consider this a potential area to look at the daily chart for another signal, just like this divergence that happened at the bottom and then the pinch play that happened right after. That kind of signal things were getting back to the upside. Now, if you look at what happened on the daily chart, we made this move up. We were trending fine. MACD was confirming until we got here, and then it kind of made like a double top, and then it rallied up here and made a significantly lower high, didn't get through the signal line, and actually failed as a pinch play underneath. The other thing that I think is really important to recognize during this rally phase is green was definitely in command. The buyers were in control. They were above 25, which is the green line, are the buyers. The red line represents the sellers. So it was definitely buyers in command, but then buyers couldn't get the ADX above 25. If you notice during the decline phase, the sellers got the ADX very strong to the upside. And then during this rally, if we would have gotten the ADX to move up enough, above 30, 25, 30, something like that, then we could have convincingly maybe continued to carry on. Unfortunately, we ended up forming a 1, 2, 3 reversal, and that's in force right now. But last week I mentioned the target for this zone was right around 3,800 on the S&P or 380 for the spider, and that is the 50% retracement, right? So if I take this low to this high and cut it in half, the halfway point is right where we've been bottoming here. The other thing is there's some price support here. If I'm just drawing a line, we make a bottom there, we made a bottom there, we made a bottom there, right around that 380 level. So that's kind of where this is trying to turn here. Now, notice what happened. Red DI came up and it actually made a little pivot above green. And this is kind of pivoting down. So it's in somewhat of a dangerous spot right now, just based on the way this is trading. I like the fact that it made a comeback. You can see on the hourly chart, we got a pretty good 3-bar rally to end the day, and there is potential divergence here. If we get some follow through these moving averages, then we'd have a divergence on the hourly chart, and then that might help us get a rally closer towards the 18-day line. If this turns into a stronger rally and can break through these two moving averages, then I think, maybe we've seen a near-term low, and this could channel sideways for a little bit. A lot of people, it'll be interesting to see what the sentiment looks like, because I have a feeling that a lot of people are going to have turned negative from this drop over the last few days. So be curious to see if that's had an impact on the sentiment numbers. But if you notice, we don't really have much momentum here. We've got a low momentum environment now after being pretty strong bearish, and then this is reverse divergence. So I call the momentum neutral here. I call it neutral here. We've got low ADX, all three lines below. This is above the zero line while these are going down. So I call that neutral. I got this neutral, and this is right at the zero line. Yes, the MACD is below the signal line, but we're right near the zero line, and this is a pivotal area to watch. So that's the update on the S&P. Let's just take a quick look at the Qs. So, because this is so much weaker. Look at how this played out. It only rallied up to the 18, which was declining, and we got a reversal here that would have been a pretty good trigger, breaking back below these moving averages. And now we're well below the 50% retracement. We're actually testing the lows in the QQQ. And also notice how this rally was really weak, and you can see that based on how the ADX was so anemic on the move to the upside. Notice how this on the monthly chart couldn't get anywhere near the 18-month. I mean, this is just a weaker pattern. We're near the zero line on the monthly, so we have to kind of watch now. We're testing this low. We'll have to see. But what we ought to see is a volume explosion on the buyers. We have not had that yet. There really hasn't been. If we got a green bar like this with some volume, that might really improve our odds that we're finding some support here. We need something like that. The diamonds are so much stronger. They're actually pulling back to this 320 area that could provide support in the form of a pinch play here over the next week or two. It tried to get above the 18-month line. Now it's kind of creeping back below. It's not by any means a powerful looking looks like it's going to take off to the upside, but it's way, way stronger than the other two major indexes. The IWM has been pretty disappointing. It started out off the gates really strong, and then on the second leg up, again, look at how there's no momentum whatsoever. I mean, look at the difference between the diamond strength. You see how the ADX got way up here? And the IWM has just remained really, really low. Actually, the weakest of all of the indexes, and we had our 1, 2, 3 reversal back to the downside, and this again looks like it wants to test these lows. So I don't like it when I see the smaller cap guys trading poorly and worse than the average stock, so it's a bit of a concern. But look at what's going on the major mega cap stocks. We've got Apple, whose relative strength line, my subscribers know that the relative strength line has broken its trend relative to the S&P, which is a big negative. It's below the 18-month, and now it looks like it's been taking out this 135 support. We've got MACD below the zero line and staying below for the first time in quite some time. There's some risk here. Look at how Microsoft has been channeling to the downside, making lower highs and lower lows, and the 18-month has rolled over. Look at how much worse Amazon is. Amazon's in a really powerful downtrend being confirmed across the board. Look at Google, strong, powerful downtrend where the 18-week is in command to the downside. Look at how the 18 and the 40 are basically parallel right now. We don't have any form of climax yet in these. Look at Tesla. Now, the volume in Tesla is starting to pick up, and we had a pretty monster bar develop here over the last couple weeks. But again, nothing that I would consider to be climax yet. Maybe into next week, this can spill over and get a big down bar down to 100. I was thinking the big round number around 100 might be the next spot to kind of watch and see if it can reach that and if the volume explodes getting there. But there's no rush in these stocks. The way they're firing to the downside, and we've got lower highs and lower lows, and they're underperforming the market, you got to be really careful about playing any of these unless you have skills on from a trading standpoint. We want to look for these to cup around and form a new base. Let the big buyers, the big institutions step in before you do. You don't, and right now they're actually exiting all these stocks. They're not buying these. These are going down. They're going the wrong way. Those guys are liquidating these stocks. They're not buying them. We want proof. We want to be following the footprints of money. And right now the footprints are running out of these stocks. They're not running in. Hope everybody has a healthy and safe holiday season here, and we'll talk to you next week. Thanks.